Okay, let's continue where we left it in the last video. We've seen, we've dissected this chart, we've seen the patterns that are showing up here, we've seen this in great detail. And now we're gonna go even further, okay? We've seen how this chart really tells a story. Tells a story that it's trying to reverse, tries a story that it's successfully succeeding this breakout. Okay, we've seen that there is that all these four drawn here are really a similar pattern. Okay, now if you watch them, you probably thought, wow, I never imagined we could go that deep with technicals. Or, wow, all that information is hiding inside a stupidly simple candle chart. Now, today, I'm gonna use that exact same chart again that I used in those two last videos. And this time, reveal more layers, including possible entries and exits. Are you ready? We explore the pattern. Now we'll get to discover about the individual bar reactions. He who loves the depths is unbothered by the ripples. عاشق الفون ما يهموني المواج. مهم أو راح يضحكوا مملي ما يسواش. Let's go. Uh, yeah, I've talked about this uptrend line, but it wasn't drawn. Now it is. You can see the signal here, and you can see the signal here. Now, what's this? That's a bear trend, right? Look at this. This is a bull bar with a big tail. If you are a bull, you hate this. This is bad for bulls. This bar is an inside bar. It, it's inside this previous bar. Okay, so you can sell with a stop, sell stop below the low of that bar. You can sell the close of this bar. This is a breakdown, right? Sell the close. And when you see this bar, sell the close. This is a big bar closing on its low. Now at this point, the market is in always in short position, always in short market cycle. At this point, you just sell for any reason. You sell closes, you sell pullbacks, you sell bear bars, you sell bull bars. You sell your clothes, you sell your phone, you sell even the sink of the kitchen if you can remove it from the wall. Okay? How many lives ruined by buying stuff like this? Oh, it's trying to reverse buy. No, market cycle is more important than anything. Okay, here we have, guess what? This is an inside bar. But we have a break above inside bar. But this is a bear trend. You bet that this break will fail. You can sell this one and you can sell the break below. Here, you sell with a stop below that inside bar. This is even a higher probability after this one fail. This is like really high win rate. So look at this. 1, 2, 3. 3 times trying to go down. It made a small reaction here. That's a wedge. That's how we read that's how we read price. I can continue like this for all these, but I'm not going to because it takes so much time. It takes a lot of time. I'm I'm not gonna draw, but look, bear bar closing, but a big tail, so it ranged break here, followed by a bull bar, but inside bar. You see inside bar here, another inside bar here. Now we went from a breakout. You see breakout. Look, until here there is not a single higher high. Yeah, maybe here we have a higher high here, but it's an inside bar, so we don't count it. We don't have a single higher high until here. Until here. Now the cycle went from a bear breakout to a bear channel. A channel is still a bear trend, but it's not that powerful. Here you can sell for any reason. Here you sell anything. Now we have a channel, but this is a very tight channel. Same thing here. You sell bull bars, you sell bear bars, you sell anything. Here we have an overshoot. I talked about this in the previous video. What do you think? What do you think smart bears or strong bears do in those situations? They take profit. They cover at this climactic sell-off. But this because this is a gift. This is just a gift from God. Imagine you are short and wow, price accelerates and gives you a lot of profit in very short time. You just fucking cover. You just take the cash out of the table and put it in your pocket. Boom. That covering, that covering of these strong bears creates this leg one, pull back, leg two. Boom. One, two, three. Leg one, pull back, leg two. But bear trend continues. We are here at this downtrend line. Boom. And that's how we read, price, and structure really, really good trades. Really good trades. Here we have inside bar. You see? What's an inside bar? What's this in a lower time frame? That's a triangle. Look, leg one, pull back, leg two. It's around the same distance. That's a measured move. It stopped at the measured move. And at this measured move, we have other layers. We have an uptrend line. We have a support here. We have a downtrend line break. Boom! You have a collision trade here. You have even an inside bar. You buy a break above that inside bar. Boom! You have an explosive move, explosive reaction, very low risk entry point. Look, this is an inside bar. And that's how we look. Another inside bar here. Inside bar here. That's an II. Yeah, this one I remember I talked about it in the last video because this is the right shoulder. This is a trade. This is a trade. In a chart like this, I can easily find 50 entries. 50, maybe more. But I don't want to enter 50 trades. I just want to enter those very low risk, high reward. When I have a very tight stop and a big swing, a big move. I want to enter something like this, something around here, boom. Something around here, boom. Maybe this one too. But I certainly want to. I certainly don't want to buy this. Buy the close. Yeah, this is a breakout of this one, but I consider it extended. If I buy here, my stop should be here. and I don't want this 1R. It's a high probability trade, but it's only 1R. It makes sense to take it 1R, around 65% probability of success, but I don't like these trades. I prefer the big moves. I prefer the low risk entry points. And you should too. You really should go for you really should build in failure. It's better to have, it's better than your edge is high reward than high win rate. Because if your edge is your high reward and you lose that edge, your reward becomes small, you are still profitable. But if you rely on high win rate and your win rate diminishes, you basically blow blow up. Like it's, if my win rate is 60% with 1R, and boom, my win rate goes to 40%, I went from profitable to loser. But if I have 35, 40% win rate with 6R, and my win rate, I lose my edge, my RR goes from 6R to 4R, I'm still in big profit. That's why uh, long term, most successful traders are those who manage the risk reward relationship. That's the most important thing. Charting is just one way to do it, but charting is not the most important. The most important, no matter how you trade, no matter what you use, is managing the risk reward relationship. Risk reward relationship is the holy grail. End of story. That's the end of it. Risk reward relationship. Maybe later I will create a video on risk reward relationship, on the holy grail, on how on adjusted risk reward relationship, because because at the end of the day, the adjusted risk reward is what matters. Do you know that a trader with 2R 60% win rate and a trader with 7R and 30% win rate are exactly the same? They have the same adjusted R ratio. Yeah, that's called the adjusted risk reward relationship uh, ratio. Uh, you have to know these numbers. These numbers, this is really mind blowing math. If you learn about it, it will change your trading forever. Forever.